Welcome back to Lamb's Cryptoverse. Today I want to talk to you about something I'm getting a lot of questions about. Everyone's saying, hey, Lamb's Cryptoverse. Actually, they don't say that. They say, Dom, hey, Dom, why does Bitcoin go down when there's inflation? When you said Bitcoin is going to be a hedge to inflation. Well, here's the deal. I think we need to distinguish between currency debasement and today's inflation. Let me explain. Currency debasement is this. Do you remember this guy? This is the quarter. It could be any coin, but basically, historically, the word debasement was when the individual coins were debased. Remember, they actually contained gold and silver and like nickel contained nickel, pennies contained copper, but these have been slowly debased. So there's hardly any silver left in these quarters. That's the historical context of debasement. It's when you add shitty base metals to what was originally a silver quarter or silver dollar, what have you. So what happens after you debase, and here's where it gets tricky. I think it's a cause and effect. That's how I think of it. People talk about, oh my God, there's a red hot inflation, but that red hot inflation doesn't come out of nowhere. When you debase a currency, I think of it like this. Light and match. It's like this. You're starting a fire in your house. At first, it does nothing. But then, it just blows up and the whole house burns on fire. So that's how I think about it. I think as debasement as part one, where you're producing more of the currency. And if there's productivity or other factors, you're not going to get inflation, like demographics, for example. If there's no immigration and the world, the United States is aging like we have in Japan, you're not going to get much inflation. But there are other factors that cause inflation. So basically, typically, when there's debasement, what happens later is you get inflation. And let me show you inflation, and I'm going to explain to you about the consumer, the CPI, and how it affects Bitcoin. I like to use trade in economics because it has a forecast too. But you could see after the currency debasement of 2020, inflation started skyrocketing beginning in 2021. And so when these inflation reports come out, like the recent one, you could see back here, for September, we had a 8.2% inflation rate, which is a bit higher than forecast, especially for the core rate. And they're looking for 8.2% next month. I like that they have forecast here. So when these inflation reports come out, if they're considered inflationary, what happens is rates go up because they think that the Fed's going to keep raising rates, and they should think that because that's what happens. And so when rates go up, Bitcoin and other risk assets like growth stocks actually go down in price. So that's where people get fooled. They get tricked by it. So remember, Bitcoin is a hedge against current overall long-term currency debasement. It's not a hedge against the daily or monthly introduction or releases, I should say, of the CPI report, for example. So now I want to talk to you about money supply and how you could see how it actually is affected by debasement. First of all, there's different types of money supply. There's like M0, which is basically currency in circulation. The dollars are out there. I think we have about $2.3 trillion out there, by the way. So that's M0 and M1, basically highly liquid assets. Then as you move up to less liquid assets, you get to M2 money supply, which is the most common money supply that you hear about in the news. And then there's M3 supply and money supply, which is less liquid, like mutual funds, things like that. And then there's M4. But basically, the people look at currency in circulation, such as dollars, and M2. So let's look at that. So here, what I did is I charted M2 money supply going back to 1997, and I charted against the NASDAQ 100. And this is come out of the St. Louis Fed. They have a great website for this. And you could see there's a loose correlation of the growth at M2 versus the NASDAQ. So as M2 goes up, the NASDAQ goes up. And you could see that more recently. And during 2020, you could see that M2 skyrocketed, and that's in blue here. It skyrocketed to, well, this is percentage. I made it in percent. It skyrocketed at 25% rate, I believe, basically. And the NASDAQ skyrocketed too. And then inversely, you could see that M2 declined during starting in 2021, and it's been declining rapidly ever since. And you could see the NASDAQ started declining. But I don't want to spend too much time on this. A chart that really shows this correlation well is this. And this is what I talked about earlier, the M0 money supply. And this is currency in circulation. Now, this one really tracks the NASDAQ 100 really well. And you could see here, even in 98, you could see as the, and this I'm showing a percent growth of money supply, meaning currency, as well as the NASDAQ. So I'm not showing absolute numbers. And you could see here, as the NASDAQ went up, so did the money supply. And then as the money supply went down, the NASDAQ's bubble burst. And you can see it's very clear here. You could see here in December 2000, the circulation hit its bottom. And at that time, the NASDAQ was crashing, right? The bubble burst. Do you remember the tech wreck where it occurred here when currency in circulation was crashing? And then the NASDAQ started going up again when the currency in circulation went up. And you could see the same thing in between 2006 and 2008. You could see that the currency in circulation declined. And you could see the NASDAQ and even the Dow declined during that time because the financial conditions were getting tighter. And one evidence of that is that the currency in circulation was declining. And you remember, the Fed had to respond. The Fed responded slowly to the 2007-2008 financial crisis. But as they responded, you could see the currency in circulation started rising rapidly. And you could see here, the peak of that was in April 2009. If we recall, the bottom of the stock market was in March of 2009. So you could see that there was a delay response. By the way, I didn't say this, but there's a delay response usually from M2, the change in M2, or the change in circulation, the money in circulation. But there is a response. There's a direct response. And now you could see, again, you could see that there was a lot of money printing beginning in March, April 2020. And this time the Fed response was quick. It was like that. The Fed responded quickly. I think it was March, April of 2020, where they had all these programs to support high yield ETFs, corporate bonds, to support everything, and including the bond market, and including where they had this Main Street program. So it was to include people on small businesses too. So they supported everything. And you could see, and they bought bonds. So you could see the huge increase in money in circulation. At the same time, the NASDAQ was increasing in price. And now, inversely, as the NASDAQ's going down, you could see the money in circulation going down. Now, the peak of circulation was February 21. Well, guess what? At that point, well, it might have been January 21, but regardless, nonetheless, Cathie Wood stocks and growth stocks peaked in March of 2021. And Bitcoin peaked a month later. And actually, I do have a chart here of Bitcoin. And you can see here, Bitcoin peaked in March of 21. And as I said earlier, the currency in circulation peaked in about February of 21 when growth stocks peaked. And now circulating supply is declining rapidly and Bitcoin price is declining rapidly. And I also want to show you one last thing here. One more thing is this. This is the Fed's balance sheet. Everyone talks about that. And you could see how it mimics what I showed you earlier, the M2 money supply and currency in circulation. So you could see it rose rapidly during the financial crisis of 2008. And it rose rapidly also in 2014. And there was some decline in 2018. If you recall, growth stocks also declined towards the end of 2018. So it's really mimicking and tracking growth stocks. And then, of course, you could see what happened in March of 2020. There was a huge increase in the Fed's balance sheet. And just in case you don't know, this includes a lot of things, but 99% of it is mortgage-backed securities and treasury bonds and notes and T-bills. That's basically what it includes. And as you know, the Fed has a quantitative tightening program where they're going to be selling or easing off these assets, but it's going so slowly. Basically, they're not reinvesting the coupons that they're receiving. So basically, we peaked at about $9 trillion. I don't think we're going to go lower than $8 trillion. It's just taking too long. So I think I covered everything. So the point was, let me just go back. This is just the target probabilities. This is the CME Fed Watch tool, showing that there's a nearly 100% probability of a 75 basis point hike. And I didn't want to focus too much on that, but I wanted to focus on this. Basically, there's the difference between the CPI and debasement. The debasement is what causes Bitcoin prices to go up and even growth stocks. But the CPI, or what trading economics calls the inflation rate, when that's high, that hurts Bitcoin prices and growth stocks. And that's why I showed you this last chart here, because everyone's still looking for a high Fed funds rate for the next meeting. So it looks like Fed's going to keep raising rates for at least two Fed FOMC meetings. So that's probably going to go into March of next year. So that's everything. So basically, I wanted to tell you is there's a difference between debasement and inflation. So don't get the two mixed up. We're not going to see growth stocks and Bitcoin do well until we get lower inflation and until the Fed stops raising rates. Well, thank you all for listening, and please like us and subscribe to us. Bye-bye.